One of the most important things as you're trying to understand these advanced income statements is one, you have to kind of know the skeleton, basically all those little minuscule formulas that you're learning. And then you have to learn how to actually apply it, right? So, as we said in part one, we were kind of talking about those different sections. And within each of those sections, there are some formulas that are really important, right? So, let's just go over a few of those. So under our operating section, one of the first formulas that you are ever going to see is sales minus sales discounts minus sales returns and allowances equals net sales. So keep in mind when we say net, we're talking about sales after we've taken something out. In this case, net sales is when we take out our sales discounts and our sales returns and allowances. Once we have our net sales, we then are going to take out our cost of merchandise sold, sometimes called cost of goods sold, and then that leaves us with gross profit. Hopefully this one is pretty familiar with you. Some of you may have just learned sales minus cost of goods sold equals gross profit. Both will work. In our case, we're probably always going to see that net sales. But in the event that you don't have sales discounts or sales returns and allowances, yeah, net sales would be the same thing as sales. Once you have your gross profit, you're going to minus out all of your operating expenses, and that will give you income from operations. So at this point, these are the three very broad formulas that you have for that operating section. And every section beyond that is essentially just adding or subtracting whatever that section is, right? So our next section is non-operating. You just add or subtract the non-operating revenues, expenses, gains, or losses. The section after that, we're doing income tax. You just minus out the income tax. The section after that, discontinued operations, add or minus the discontinued operations amount, net of tax. I'll show you what that means soon. And then your non-controlling interest. Take out the non-controlling interest net income, or if it's a net loss, add it. So this first section, that operating section, probably is the most challenging as you're getting started because there's a lot of formulas involved. But let's dig a little bit deeper into this. Let's start with our first things first, sales. In this case, we have 8,500,000 in sales. And that's going to drive me crazy. One moment. Number. There we go. And now we are going to grab those two items that are going to be removed from sales, your sales discounts and your sales returns and allowances. Sales discounts, 13,000, and sales returns and allowances, 460,000. Okay. Now this is an image, so I can't really highlight on it, or if I can, I don't know how to. But if this was something that you would were working on, I would say for each one, mark it off as you pull it into your financial statement. That way you can see what you used, what you didn't use, and you can kind of make that determination if everything here is relevant. Spoiler alert, for this particular problem, everything on this informational sheet you are going to use. But there are instances where, you know, there might be some extra things in there that shouldn't go in your income statement. All right, notice when I put in my sales discounts and my sales returns and allowances, I went over to this left-hand column. Your left-hand column is used whenever you are making a list, right? You may have seen income statements with 3 columns instead of just 2, and that means because there was a list within a list. Basically, as far as you need to go within your list, that's when you know you have to go over to the left-hand column. But let's go ahead. I'm going to do a math line. Good. Add those two together. So the sum of my sales discounts and sales returns and allowances is here, 473,000. And that leaves me with my net sales. And here's where we see our first formula. Our sales minus our sales returns and sales discounts equals our net sales. Our next one is our cost of merchandise sold. A cost of merchandise sold, it's not a list, it's only one item. So we're going to go right to the right-hand column. And net sales minus our cost of merchandise sold gives us gross profit. Next, from our gross profit, we are going to take away our operating section and our operating expenses. And our operating expenses will usually have kind of like a header or a list starter, we could say. So in this case, operating expenses are usually separated into two main categories. And those two categories are usually selling and administrative. Now, sometimes you might be looking at a different textbook and they might call these something a little bit different. Just whatever textbook you're using for that particular course, take a close look at that operating section, see what they split it up into. But selling expenses and administrative expenses, those are the ones that are probably in 90% of your textbooks, and it might just be throughout your whole curriculum here at IRSC. But just be aware, sometimes I see it separated into weird things in the real world. All right, one other thing I should point out is that some problems, which you'll probably see in some of the other assignments you do in Theory 1, is instead of giving you the sum of the selling expenses, so here you can see they just give us the total, they would list out all of the selling expenses. And if that is the case, this is where we have a list within a list. Our first list would be our selling and admin. But if we were given individual selling and admin numbers, we would have to go to a third left-hand column to list out our selling, total, list out our administrative, total, and then sum those up for total operating expenses. But this problem, we're being kind, so we have simply the total. If you want an example of what it looks like when they use 3 columns, see your textbook, they have an example of that. And 375. Let's go ahead and add those up. So our total operating expenses is $825,000. And just like that formula we just learned, gross profit minus operating expenses equals income from operations. Okay. All right. So this is essentially our operating section here. A lot of steps, probably always going to be our biggest section whenever we're doing these. But our next section, our non-operating section, please be sure that you're taking a close look at what goes into that non-operating section, because sometimes it won't be as clear as it is here. So our textbook likes to separate our non-operating section into two main sections, other revenues and gains, and then another one that is our other expenses and losses. So I see here that I have 2 other revenues / gains. I have rent revenue of $120,000 and I have dividend revenue of $36,000. So again, I'm making a list, so I'm going into that left-hand column. All right, I'm going to total those up to the right. And our textbook, it's not my favorite thing in the world because it's an unlabeled number. It kind of drives me crazy. But our textbook then gives a subtotal. So I'll do it the way our textbook does. If it was the real world, I probably wouldn't. But here's a subtotal. So we added in the sum of all of our revenues / gains. And then next we are going to list out our other expenses and losses. We only have one. Here, this interest expense for $250,000. Since we only have one, we do not have to put it in the left-hand side because it's not a list of more than one item. We'll just put it over to the right-hand side, $250,000. And then when we take that out, we find our income before income tax. There we go. Really hate this unlabeled number. Okay. Next is going to be your income tax section. So obviously, when you get to your senior level courses, you are going to be learning a lot more about corporate taxes and how it really works. In this case, though, we are going to assume that income tax is nice and easy and there's no special rules. We're going to say that we're going to take this income before income tax and multiply it by 25%, which is our tax rate given, and boom, there's your taxes. Yeah, that's not really how it works in the real world, but that's fine. For academic purposes, that's usually what we do. So next we have our income from continuing operations. And this is kind of leading us into our discontinued operations section. Okay. Let's make sure that nothing silly's happened since I started. 1,596,000. 1,596,000. Perfect. All right, next is going to be our discontinued operations. In this case, we are going to see two. We are going to see a gain and a loss for that discontinued operation. So usually we're going to use a header when we start our discontinued operations section. And then we will list the gains and losses together, right? Basically, we're not going to separate the gains and losses the way we did in our non-operating section, but we will make a list. So let's start with the gain. Gain from disposal of Green Pen Division. All right. Now here it lists this gain from disposal of Green Pen Division as 250,000. Now we are not going to put discontinued operation amounts directly into the statement unless it says that it is already net of tax, right? And remember, net of tax means that taxes have been taken out. In our case, right, this gain from disposal of Green Pen Division, it is coming after this income tax calculation, which was based on everything above it. Those gains and losses from the discontinued operations were included in that calculation. So when we say, oh, they have a gain of 250,000, we want to do it saying, okay, yeah, it was 250,000, but 25% of that is being taken out for tax. So there's a few different ways you can do it. You can multiply your 25% times your gain and find your tax, then take it out. But one thing I want us to start getting a little bit more comfortable with in Theory 1 is having a few little key shortcuts that we can use that are going to be helpful once you move on to some of your other courses. A good math understanding can be really important in these. So in our case, the gain is $250,000. And that gain has to be reported net of tax, right? So 250,000, if we are going to be taking out 25% for taxes, that means that 75% would be left over. And here's where we're going to find a little shortcut. So instead of multiplying it by 25% and then taking that result out from your gain, we are simply going to multiply it by 75%, right? Because 75% of this gain will be left over once the IRS takes their cut. And that is us reporting this amount net of tax. It's going to work the exact same for the loss. Loss from operations of discontinued Green Pen Division. It was a loss of 870,000. If we do it by 1 minus the tax rate, we'll get the 75% that is left over after that tax benefit, since this is a loss. So really, the net effect of this is just a loss of 652,500. And we're going to need a part 3. Can we get part 3 up next?